Genex Power's focus is its growing portfolio of Australian renewable energy generation and storage projects. The portfolio includes large-scale batteries, pumped storage hydro, wind and solar assets across Queensland and New South Wales. The Kidston Clean Energy Hub is Genex's flagship asset. This project includes pumped storage hydro, which is in development for ramp up in late 2024, solar generation, which has been operating since 2017, and wind assets targeting a final investment decision next year. The project has attracted funding from the Northern Australian Infrastructure Facility and the Australian Renewable Energy Agency. In total, Genex Power has 150 megawatts in operation, over 250 megawatts under construction, and a development project of 2.25 gigawatts. CEO Craig Francis is here to take us through the story. Thank you, Craig.
Thanks, Stu, and a pleasure to be here today for the Bell Potter Environmental Day. It's a very apt theme for the day, and we're pleased to be telling the Genex story. As Stu said, Genex it was founded in 2015 with a strategy to develop the first pumped storage hydro project in Australia in over 40 years, really, and the first developed by the private sector. Along the way, we have established quite a comprehensive portfolio now of in operation assets and development projects in wind, solar, battery, and pumped storage hydro, of course. So very pleased to bring the story to the audience today. Just a snapshot on the corporate side of things. Our ticker is GNX. Our market cap's about $250 million. And we had cash at bank at 30 September of $87.5 million. About a little less than half of the register is institutional. So really what we've assembled today is a $1.1 billion portfolio, which is what we call committed. That's 150 megawatts in operation and 250 megawatts under construction. On top of that, we have a pipeline, as Stu said, of 2.25 gigawatts, which we're now focused on prosecuting as the next stage of the company's growth. And importantly, the flagship, the jewel in the crown, is our pumped storage hydro project, which is the first to be developed in Australia in over 40 years, the first ever by the private sector, and has really cemented our place at the forefront of this energy transition, getting that project fully committed and fully funded, and in its third 4 years of construction. But really, Genex's purpose is to play a leading role in the energy transition in Australia, and really trying to innovate along the way. And we feel like we've done that with our pumped storage hydro and the rest of the portfolio. So I'm very pleased to give a bit more of a background on that through this presentation. This slide here just shows a snapshot of the portfolio that we've assembled to date. In the green on the left of the slide, you'll see the Kidston Clean Energy Hub. That's comprised of 3 projects. The flagship Kidston Pumped Storage Hydro, 250 megawatts in construction, looking to be energised at the end of next year. The Kidston Stage 1 Solar Farm, 50 megawatts, which has been operating for over 5 years now, since 2017. And the third stage of the Clean Energy Hub, which is a wind farm of 258 megawatts, which will be targeting a final investment decision next year. And altogether, that's pumped storage hydro, solar and wind in the one location. It's a global first, and really what we see as the first renewable energy zone in the country. Moving down the coast of Queensland, we have our 50 megawatt, 100 megawatt hour Baldercombe battery project. That's a Tesla battery, which has just commenced operations earlier this month. A very exciting milestone for us. And further south, we have the Bully Creek project, which is a really large development project for us. 2 gigawatts of solar and battery storage capacity. We've just announced in October our first offtake for that project, which will underpin a 775 megawatt solar farm as the first stage, which will be the largest grid-connected solar farm in the country. So another big milestone for us to deliver that project, targeting a final investment decision next year. That'll be followed by a big battery, a 400 megawatt battery at that site, with further expansion opportunity for solar and battery down the line. And finally, rounding out the portfolio is a 50 megawatt solar farm in New South Wales, the Gemelong Solar Project. That's been operating since 2021 and has been a good performer for us. So just recapping, that's 400 megawatts committed in the hydro, stage 1 solar at Kidston, the Gemelong Solar Project and the battery, and 2.25 gigawatts of pipeline assets. So a very exciting stage for the business as we prosecute that going forward. Just to give an overview of what the business is currently doing, this is our FY23 results, and we did about $24.2 million of revenue, which is relatively stable. That's based on the 2 operating solar farms, roughly even split between the 2 of them. One's got a full 100% 100% of its output is contracted with the Queensland State Government for 20 years. The other one is completely exposed to the spot market, and we find that provides a really good blend of revenues for the business. Full year EBITDA of $11.2 million, and we've been operating cash flow positive now for 2 years straight at $4.3 million last year. We recorded our record net loss of just under $1 million last year, and are really on the pathway to profitability as we bring our battery online this financial year. And a really strong cash position, as I mentioned, $87.5 million at 30 September 23. But really, where this business is at today is it's at the next step change, really, in its life, in terms of the revenues that are about to come online. We've been slowly ramping up our financial performance as we continue to deliver these projects. And with the hydro project coming online in FY26, we're expected to see our revenues push north of $80 million, which is a really big milestone for us. It's been a long road to get these projects fully funded and into construction and now into operation. It will be a big milestone to get there with the hydro. The reason we're able to put this chart together is that 83% of this profile is contracted out to 2055, and that represents an annual average revenue figure of $95.6 million. Remember, this is the fully funded portfolio that we have developed to date, and throwing off a lot of cash with really, really high EBITDA margins of 73%. So really looking forward to having all these projects online, and the outlook is really strong for the next step change in the business's financial performance. Our flagship project, this is the Kidston Pumped Storage Hydro project, and really what it is a redevelopment of an old gold mine, which is 2 open cut mine pits, into a pumped storage hydro scheme. The idea of the scheme is to put a dam around that middle body of water that you see in the middle ground there, and then drain that really deep pit in the foreground to create 240 metres of head height differential, which are connected via an underground waterway to create a pumped storage hydro scheme, which just acts like a big water battery. Essentially, water is released at periods of peak pricing to generate electricity, and then pumped back up at off-peak times to store that energy for further use. It's 250 megawatts for 8 hours, or 2,000 megawatt hours, and it'll be the first pumped storage hydro in Australia in 40 years. It's got a 30-year offtake with Energy Australia for a fixed price, which means we just basically receive rental income for 30 years, highly predictable revenue stream with a high-quality counterparty. And importantly, it's under construction, 3 or 4 years, so another year and a bit to go. And that's a fixed price lump sum contract with McConnell Dowell and John Holland, so very high quality contractors, on target for energisation in the second half of 24. This slide just gives an overview of how the scheme will look when it's completed. That's a bird's eye view in the middle there, showing the upper reservoir full of water, and the lower reservoir drained, and to the right shows the comprehensive underground works. But really getting to the pointy end now, all those underground works are to be completed by Christmas, which is going to be another great milestone and really a really big de-risking of the project as it enters its final 12 months of construction. This just gives a picture of what it looks like underground. This is the powerhouse cavern, which we're currently excavating. It's a massive underground void, which is being excavated via drill and blast techniques, 80 metres long, 25 metres wide, and nearly 50 metres high at its highest point. And you'll see there on the right that the current status, we're a bit over halfway now, taking that red line down to the deeper levels to house the pump turbines. So a really massive void. That's the final piece of underground excavation, which is being undertaken in the last couple of months of this year. Just some other pictorial updates of how it's all going. You can see the dam liner is going down on the left there. All the major equipment is at site, and also the transmission piece is well progressed. The transmission towers going up, lines being strung, substations being completed. So this is really getting to the pointy end now and to the final stage of the construction program, which is really about fit out of the underground power station. So it's been a long, hard road, 3 years of construction and 6 years of development, but we're finally getting to the pointy end now and looking forward to realising first revenues in the first half of 2025. Our Balderton Battery project, which has just come online in November, is 50 megawatts for 2 hours. It's Tesla Megapack technology, and it was constructed and delivered on time and on budget. It's operated under a 20-year warranty with Tesla, who also does the operations and maintenance. And it also has a Tesla doing the offtake. And what this offtake structure does is gives us real exposure to the pricing fundamentals of energy storage, which we think are really critical when coming into this El Nino summer, where we're going to see more heat waves, we're going to see coal plant come under pressure, transmission lines come under pressure, and that's going to create lots of volatility, which is where these batteries play. The way the offtake works is Tesla gives us a guaranteed revenue underwrite, and we share in the upside above that with them to compensate them for taking that risk. And really deliberately structured to give us that exposure to the upside. We're very excited about this battery's contribution to our revenues. It's contributing now, charging and discharging today, and will be fully operational over the summer to help support the grid and to keep the lights on in Queensland, but ultimately also to make some good returns for GenX. Moving on now to our development portfolio, which I spoke about, the 2.25 gigawatt portfolio. And really the first two projects to be developed in that portfolio are the wind project at Kidston and our Bully Creek solar project. The wind project is 258 megawatts being developed in 50-50 partnership with J-Power, which is an 8% shareholder of GenX. And that's really advanced now, looking for a final investment decision next year. It's a really attractive wind profile, counter-cyclical to solar, which means we're getting really good pricing in the offtake and really good demand for offtake. We've signed our first offtake with Energy Australia for 30% of the project output and looking to lock in the second offtake shortly, which will enable the financing process to commence in the new year. But expected to be operational in late 26 and using Gold wind turbines. So that project is well progressed and looking for that investment decision next year. Similarly, on a similar timeline is the Bully Creek solar project in southern Queensland. That is targeting a final investment decision next year as well. And that's really now underpinned by our first offtake, a 337.5 megawatt offtake with Fortescue Metals Group Limited for 25 years, which will underpin the solar as the first stage of up to 775 megawatts. We're expecting another offtake to be locked away before we commence the financing process in the new year, and that will underpin what will be the largest grid-connected solar farm in the country. So very excited about this project indeed, and it's really a massive scale project, but really presents significant opportunity to make a big dent in our renewable energy targets in Australia. Again, that one targeting a final investment decision next year. With both of these projects, both the Kidston Wind and the Bully Creek Solar project, we're really taking a different approach to the funding of the equity requirement for these projects. The strategy has really been deliberate to focus on larger projects, which gives us flexibility of funding them at the project level. So that's bringing in partners at the project level to co-fund alongside GenX and our partner J-Power. To underpin that, we've been focusing on high quality, long-term contracted revenue streams with counterparties like Fortescue and Energy Australia and others that we're talking to, really at the top end of town. And that will underpin good demand from equity investors to invest alongside us in this project. We've got J-Power there as a 50% partner, so really we're looking at the balancing equity. And we've mandated advisors concurrent with our debt financing process, which is how all our projects to date have been financed and very conventional for this sector. They'll be running an equity process to introduce a partner. And what this structure means is that we'll be essentially paid a fee for the value we've created, which will enable us to retain an equity position in the project. We'll also get paid to manage the construction of the project and the operation of the project. So it's a really good structure, a non-dilutionary structure really that we're taking through to fund these two projects. Just in terms of our sector and how we're positioned, this chart here just shows what's happening in the national electricity market. And really, it's the early closure of the existing thermal generation, the coal-fired power stations, and the replacement of that with a multiple of wind and solar generation along with storage to balance it all out. And really, we're expecting that to accelerate over the next decade, as you can see in that chart there. Really what that does is underpin really strong demand for offtake from our wind and solar projects and storage projects, as well as strong demand from the financial sector to support us in our business as we expand the portfolio. That's from an equity perspective, from a debt perspective. So really the acceleration of the coal plant closure is going to gives us a strong tailwind as we continue to grow our business from 400 megawatts out to a gigawatt and beyond. And that's exactly our growth strategy. We've got a 150 megawatt operating base with 3 projects now fully operational, but another 250 megawatts close to completion and looking to energise at the end of next year to give us 400 megawatts of our committed portfolio into operation. And we're really focused on making sure that we deliver that project as quickly and as efficiently as we can. But beyond that, we're looking to leverage the position we've established in our sector now and the relationships we have with all the counterparties in our sector, and particularly at the top end of town, to continue to grow the portfolio. And we're looking at the 258 megawatt wind project at Kidston, the 775 megawatt solar farm at Bully Creek, and then further stages at Bully Creek, 400 megawatt battery and further 800 megawatts of battery and solar, as well as the potential to expand our battery at Baldercombe. So the future is really bright for GenX as we look to the next phase of our growth on the back of that step change in revenues that we're expecting in 2025. And longer term, we see other opportunities in batteries, in pump storage, hydro, and solar and wind. So a really exciting time for our business. Just to recap on the story, a diverse renewable energy and storage portfolio of $1.1 billion and 400 megawatts, which is fully funded and growing. And that will be growing with our 2.25 gigawatt pipeline of wind, solar, and battery opportunities. We're really finding that we've got a real seat at the table now in our sector with this proven track record of delivery, 3 projects delivered on time and on budget. The hydro project, the first in 40 years, and that's going really well compared to others in the sector. And that's really given us these strong relationships with tier one counterparties. We've got a really exciting revenue portfolio. It is highly contracted, which gives us long-term certainty for a large proportion of our revenues, but we've also got strategic exposure to the spot market, and that's in terms of the large-scale certificates, which remain really buoyant in their pricing, as well as the dynamics of storage with our battery and the contract we struck with Tesla there. And with everything we do, we're very focused on the environment, community, and importantly, in the Indigenous community in which we operate. We've got 11% Indigenous employment at Kidston, and we're looking to carry that through to our other projects. That's a really real feather in our cap. But look, lastly, just to sum up, exciting stage for the business, but we still remain the only pure play renewable energy and storage business listed on the ASX. So a real opportunity for investors to get exposure to our sector and the price dynamics that we're seeing through the GenX stock. Thank you very much.
Great. Thanks very much, Craig. Might just touch on some of the commercial arrangements that are in place. You noted the long-term contract for offtake from the pump storage hydro and also through the Tesla arrangement, but then you've got generation assets as well. So perhaps just talk a bit about how those complement themselves in terms of obviously being able to arbitrage the market on the storage side, but also have that that generation coming through.
Yeah, thanks, Stu. Look, it's really important to have certainty over revenues. I think in our sector, it's important for financiers, it's important for equity investors. 100% spot market exposed portfolio is a difficult one to manage. So we do that through power purchase agreements, and we've struck a lot of those along the way. The big one being with Energy Australia, running our pump storage hydro project. That's a rental agreement, so they essentially keep the P&L profile of the project and pay us a fixed price. Where we have taken market exposure and we have the generation assets that are collecting those revenues is where we see upside, and that is New South Wales Solar. We've seen very buoyant pricing there, continuing well above what we'd be seeing in the PPA market. And that was particularly evident last year when we saw the market disruption for a couple of months and continued elevated pricing, as well as in large-scale certificates under the Renewable Energy Scheme. They remain buoyant. Everyone thought they'd be a couple of dollars by now, but we're still selling them for $50 and above to the big gentailers and the like. So, but also with the battery project, that's very deliberate. 50 megawatts compared to a large 250 megawatt pump storage, fully contracted. We've got 50 megawatts, largely exposed to the underlying price dynamics. And we think there's real opportunity there for that project to generate substantial returns for GenX. We said at financial close that would do about $10 to $15 million in revenue, but we think there's significant upside above that. So we're looking forward to the first summer of its operation, happening today.
Yeah, great. And just on policy settings, obviously you've been able to attract funding from NAIF and ARENA, but just more broadly, where do you think the governments are going, and what do you think we should look out for, which could come in play to benefit your business?
Look, I think there's been a real shift in policy settings in our space in the last 2 to 3 years with change in government and alignment. I think with the federal and state governments, there is a real, everyone is rowing in the same direction now. and they're setting really ambitious and aggressive targets, which we must meet, right? If we're gonna meet our objectives to limit global warming. Um, I guess where we sit, we think it's not happening quickly enough, and I think a lot of our peers would probably agree, and market commentators would agree. It's not happening quickly enough, and so we think the real opportunity is for the removal of some of the headwinds that we face in terms of the grid connection space, in terms of planning, streamlining those processes. Obviously, nothing should be done at the expense of the environment, but the biggest threat impacting the environment is climate change. So we need to be able to move more quickly, and I think that's where we're hoping to see some change that will help drive a more rapid transition.
And is growth constrained by ability to connect to the grid, like the grid stability under renewable energy outlook, or how does that work? Just perhaps talk about some of the risks around new projects.
Yeah, look, I think this grid was designed for concentrated thermal power plant, sort of dotted along the coast. The renewable energy resources are all inland, and they're scattered all up and down the east coast. So the transmission network wasn't designed for this sort of generation fleet, and we need to adapt it. Uh, the other issue we have is that these network service providers that control access to the grid and your grid connection, they're very busy. They're struggling to get people. They've got hundreds and hundreds of grid connection applications that they're trying to process all at the one time, and they need to do so while ensuring that the lights stay on. So I don't envy their job, but we need to work with them, and we are working with them to ensure that we aren't being unnecessarily held up, and we're continuing to deliver more capacity to meet the energy needs of the country.
Obviously, you've focused on the East Coast so far, but if you look more broadly and perhaps out 2 or 3 years, and when you start looking at that pipeline, are there opportunities in Western Australia that you're advancing?
Look, not yet, but we're very eyes wide open and looking at all opportunities. As you say, we are operating on the East Coast and principally in Queensland. We have one project in New South Wales, but the rest in Queensland, and we do know our way around the state. Having delivered 3 projects to date and a fourth, or 2 projects to date and a fourth in construction. So, look, yeah, we certainly are interested in Western Australia, but we haven't gone there yet. And I think in the short term, we're focused on this 2.25 gigawatt pipeline we've assembled in the east.
And I imagine as the portfolio grows, you get that portfolio benefit of de-risking across the entire business. So that's great.
Absolutely.
Craig, that's all we've got time for. Thanks very much for being part of our conference today.
Thanks very much, Stu, and thanks to the audience for having me.